Hi, this is James Shrug with Westpac London's end of day report for Tuesday, July the 3rd. Well, it was a positive day in equity markets. The main driver seems to be Chinese press reports suggesting that further policy easing in the form of a bank reserve rate cut would soon be forthcoming. And that led into increased speculation generally that central banks this week at least, including the European Central Bank and the Bank of England, would put in place further stimulus. There's talk now of an ECB 50 basis point rate cut rather than the quarter point cut that is the current consensus, and even mention of the ECB possibly expanding its balance sheet. I think that's going to have to ultimately happen, and certainly that's Westpac's view, but probably a little bit early for it to happen at this stage. And that all meant that when we saw figures in the US that showed factory goods orders rising 0.7%, which wouldn't necessarily support the easing case because it was a stronger than expected number, it nevertheless added to US market gains because it was the first rise there that we've seen after 2 monthly declines. Commodity markets did very well today, also on the back of that Chinese and other central bank easing speculation. In London, though, it all seemed pretty small fry compared to the unfolding Barclays saga, or should I say banking saga, given that many other banks, as yet kind of unnamed, and even the Bank of England, or at least personnel very close to the top, have been dragged into the sorry mess. We saw the chairman resign yesterday of Barclays, delay his resignation today after the CEO and the COO, the Chief Operating Officer, both resigned. So we got the CEO, or former CEO, he's testifying to the Treasury Select Committee tomorrow actually, and more will be revealed then, possibly about the apparent linkages to the Bank of England too. So that's meant that UK banking stocks have bounced around quite a bit today, but it didn't prevent the UK market from participating in those gains that we saw in other markets. And those gains were, well, as I say, the London market up 0.8%, the French market up 1% today, the Germans up 1.25%, and even bigger gains, slightly bigger gains in the Spanish and Italian markets. The Dow Jones in New York up about 0.5% at 6 o'clock London time, New York lunchtime. On the commodity markets, we've got some big gains, as I mentioned, wrong page, and they include gold up 1.6% today at $1,622 an ounce, a bigger than 2% gain in copper prices, and oil up 4.3%, supported by the easing talk, but also three missiles that Iran set off. In the Aussie dollar, we're looking there at a 1.028 rate. It's a little bit higher against the US dollar today, also in line with the favourable risk appetite that's emerged today and the commodity price gains. A couple of things I didn't mention. The IMF put out their latest growth forecast for the US. They revised it down slightly. This year, they're still just above 2%, at 2.1%, and they've got a 2.4% forecast. Sorry, they're at 2% now. They were at 2.1% in April, so they've nudged it down a little bit this year and nudged it down a similar amount to 2.25% for 2013. That compares to Westpac's forecasts, which are just under 2% in both those years. Also, it was sort of lost in all of the banking news and I suppose equity market rallies today, but Europe was in the news today, but for a good reason. Ireland returned to the sovereign debt markets, at least for short-term money, for the first time since their bailout in late 2010. Okay, that's it for today. I'll be back tomorrow.